I realized that I had a huge weakness back 18 years ago when I started trading the Forex market. I bought trading systems over and over and over again and started becoming really poor because I kept jumping from system to system, hoping that the next one would be better, and realized that this was a huge mistake because I was losing in the markets and I was losing off of buying and purchasing these products. And I later realized that this is something that the majority of traders are falling victim of as well. And they don't really realize what's happening. The markets go through phases, losing and winning with the strategy that you're using. And when somebody starts to lose with the strategy that they're using, they trash the system and move on to the next one. And it's this never-ending process. So I want to approach the market in a different way and give you guys some tips. And what I'm going to show you right now is going to help you on your journey. I guarantee it's going to change your trading for the better. And it's so simple, you're going to just go crazy. So what you're looking at right here, strategy 1 and strategy 2. So strategy 1 is a single strategy approach. So one system that you use to approach the market. The estimated profit on this system is, say, we're going to give an example of 3% every single month. The estimated drawdown is 30% over a 20-year backtest period. Okay? So the drawdown is a little bit high and the profit estimate is, well, low. And that's typically standard for a trading system when you backtest it over a 20-year period. Strategy 2, 4 different strategies, 1 account, each strategy profiting an estimated of 1%. And each strategy gives an estimated drawdown of 5% over a 20-year period. So you tell me, which is better, strategy 1 or strategy 2? Well, if you just look at the simple math here, you'll see that strategy 2 has an extra percent profit, which is 4% total for its estimated monthly profit, and 20% maximum drawdown estimation over a 20-year period. So that's already better than strategy 1. So multiple strategies on one account, lowering the risk and potential profit of each strategy, but when they're working together, you have a much better system, a good profit amount, and lower drawdown, also over a long period of time. So this is what I've been doing with my trading strategies. So let's get into the charts and show you what I've been doing over the last 6 to 12 months along these lines and how much it's helped with my trading. So let's use the Ranger and Vigorous auto trading strategies as examples. Okay, so they've been running on this account since May 24th, 2021. 21% profit, 5.53% gain. So we're running these two strategies at 50% less risk than their standard default settings. So, for example, the Ranger on this account, if it was run by itself, would be around 20% profit, so it'd be close to the same, but the drawdown would be at 10% instead of the 5 that you see here. So the same thing with Vigorous. So 20% profit and 10% maximum drawdown. So if we cut down the risk of these two strategies by 50%, then that's when we come out with the 21% gain and the maximum drawdown of 5.53%. So we're lowering the drawdown here and keeping the profit the same by utilizing two strategies on the same account with 50% less risk. So let's take this even further. Let's say that we have 3 strategies, okay, right here. 3 strategies, that means that we can lower the risk of each strategy down to 33% from their default settings because we have 3 of them running on the same account. So 33 times 3 equals around 99, right? Okay, so if we have 4 strategies, we can have each strategy running at 25% of its standard risk, and we can still make the same profit. So that's the approach here, is keep lowering the drawdown while keeping the profit the same. But it can go even deeper than that if you know how to approach your trading. And that's what I've actually done with my powerhouse algorithm. I saw this idea and saw there's a lot of potential behind it. And so I've built 4 trading strategies, 4 algos that auto trade the market, and decided to put them all into one piece of software that can trade all of the algorithms on the same account at the same time. But not only lowering the risk of each strategy, but also allowing each strategy to work with each other to meet mutual goals of profit and stop loss. So this kind of cross-pair, cross-strategy take profit is a new kind of approach that not only allows us to lower the drawdown and to keep profit really good, it also allows for better, cleaner trading over the long term. And so this is what I'm using now. I'm really proud of the Powerhouse EA, using it on my accounts, and it's still in its launch phase until the 10th. So I recommend checking it out. This kind of market approach is massively beneficial. Using multiple strategies on one account at lower risk will help your trading. And I don't think enough traders are utilizing this type of idea or methodology because they haven't either thought of it or it's too much work. If you put in the work, if you find the best algos out there, whether they're paid or free, and lower the risk of each one, that means that when one fails, the others will make up its lost ground, and you're better protected, your account won't suffer as heavy of a loss, and the other algos will be able to make up for its losses. This kind of approach will be safer for your trading, and you'll have a better chance at long-term wealth growth. So there's a few things that you should recognize when building out a strategy using multiple strategies on one account. What's the starting lot size for most brokers? It's 0.01 lots. So when you're running multiple strategies on one account, you have to be aware that you're going to probably see a lot of trades on that account, and the chances of overexposure can be pretty high if you don't know what you're doing. So do your research. How often does a strategy trade? When does it? What kind of lot size does it start with? And figure out what a good balance would be when running with other strategies at the same time. So for example, with my 3 presets that I have for the Powerhouse EA, medium, high, and low, I have a $5,000 starting balance that's recommended with 200-to-1 leverage. This account balance gives an estimated profit of 5 to 8% a month and a maximum loss or drawdown percentage of 20%. So that means when 20% is met across all 4 strategies within the Powerhouse EA, they will all close out for a realized loss. This is a very rare thing to happen, but it's there for safety. Okay, so medium risk. This is $10,000. So when we have a $10,000 account, we can use a medium risk setting, and we can also have lower leverage as well, because we're still using that 0.01 lot size like we were in the high risk setting, but we have a 2x size balance. So this means that our profit is lower at 2.5 to 4%, which I think is the happy medium for any kind of trading, and a maximum risk cutoff or loss of 10%. So the same thing as in the high risk setting, when all strategies hit a maximum 10% loss, everything closes out for a realized loss, and the strategy moves on to the next available trades. So you're probably wondering, why 2.5 to 4% monthly profit and a loss that's higher at 10% total drawdown or loss within the strategy? Isn't the idea to cut your losses short and let your profits ride? Isn't that what every trader says, every book out there says? I have done tons of research and back testing. I've built over 250 algorithms and systems over the last 18 years, and I have found zero benefit from this idea. It's bullshit. The traders in the books that are telling you this are full of it. They don't know what long-term wealth is, and if they are doing it, they are one of the very few percent, probably 0.1%, that are actually achieving success with this idea. And it's unfortunate how widespread it is, because it's causing the majority of traders to lose. So my approach here is, if I am profiting 2.5 to 4% on a monthly basis, that means I can make back or recover that 10% loss within a 3 to 4 month period and still come out with profit within a 12-month period. So as long as I don't hit that 10% loss cutoff too many times within a year, which is more than 3 times, then I can still come out with profit for that year. That's the approach with the Powerhouse EA. That's the approach with my trading, and that should be your approach as well across the board with all your trading. Okay, so 20% set file, low risk, 50 to 1 leverage, 1.33% profit to 2% monthly, and a 5% maximum loss. So you can see what's going on here. When we increase the balance, we're lowering the risk. This is how everybody should be trading, because trading is about capital preservation. It's not about trying to grow your account at a fast pace and become a millionaire overnight. It's about gradually increasing your balance. Steady growth is key to growing wealth. Most people are impatient. When you have more balance, it's better to protect that balance than to gamble with it. All right, guys, that's pretty much what I wanted to cover in this video. If you liked it, please give me a thumbs up, subscribe. See you on the next one.